We are joined now by the chairman of the House Financial Services Committee, North Carolina Congressman Patrick McHenry. Good morning. Good to have you here in person.
Great to be here.
I want to go into the banking crisis, but I first want to ask you about a bit of business in regard to what Speaker McCarthy has said. He's directing Congress to investigate, he tweeted, whether federal funds are being used by the state of New York, where a grand jury may soon indict the 45th president. Why is he issuing this threat? And isn't this kind of congressional investigation just using federal funds from U.S. taxpayers on a political errand? I
think the viable question for the American people is whether or not you have a progressive prosecutor using the justice system to go after political enemies for a political splash. And that seems to be the case here with the Manhattan DA.
But you're trying now to focus on things of substance that are at crisis level in the banking sector. Should one of the too big to fail banks, the large, systemically important banks, be able to step in here and buy up a troubled bank like First Republic?
I think all options should be on the table.
Is there anything that would block that kind of white knight rescue?
What I need to get to the bottom of investigatively in Congress is the who, what, when, where, why, and how of these bank failures and the decisions made over
Signature and Silicon Valley.
That's right. And then the decision made over the weekend. We saw a private sector response to help support a bank.
Right.
Was that a viable option last weekend, or was there an ideological lens that prevented them from taking these institutions and making it less turbulent for America?
That's why I was asking the question I asked you, because what you're suggesting there is that the Biden administration didn't want a big bank to come to the rescue here.
We don't know that.
And we're now in a continued crisis. You don't have an answer to...
I don't have the facts on whether or not the FDIC had a viable buyer last weekend. We have press reports of two banks that were at the table. We have comments from other bankers that they were prevented from bidding. I don't have the facts. And until I have the facts, I'm not going to draw a conclusion, especially in a moment like this.
But you're suggesting it could have made things worse.
Well, I think we know we had a very rough week for American banking, and we lost confidence. And I think that raises the questions of what happened last weekend.
You did hear Senator Elizabeth Warren suggest that she would favor a congressional initiative to lift the insurance on currently uninsured deposits, those above $250,000. She put a cap of $2 to $10 million. For how long? How big? Who does that apply to? How would you craft that? Do you see a chance to work here?
Well, it's the first time I've heard a proposal like that. And I have not had a single conversation with the White House or the administration about deposit insurance changing the levels. What I will do, though, legislatively and an oversight function is determine whether or not we need to address the FDIC deposit level. We did it after the last financial crisis, raising from $100,000 to $250,000.
You're calling in the head of the FDIC and the vice chair for supervision from the Fed's Board of Governors. What is your intent? And will you call up Mary Daly, the head of the San Francisco Federal Reserve?
We need to understand the decisions that were made last weekend from Thursday until Sunday night on whether or not there's a viable private sector solution. We also need to understand the underlying causes of the collapse of these banks, and we're going to get to that. The question of the San Francisco Fed is a question of supervision. We need to get to the bottom of whether or not this is a supervisory problem, a regulatory problem, a bank mismanagement problem, perhaps all three. In all frankness,
I want to ask you about some of the things being said. Populist politics around banking, everyone engages in.
It never ends.
It never ends. But the two banks that did fail, they were in New York and they were in California. Conservatives like Mike Pence, Ron DeSantis, Donald Trump, your colleague James Comer, they're throwing around terms like woke banks advancing the liberal agenda. They're blaming diversity and environmental initiatives. Isn't there a danger in casting a very substantive, active crisis in terms of a culture war?
I think everyone's preaching their book, and that's what we heard in your first segment.
Right.
Everyone's
but you agree that's not helpful?
Their book, and their book is, well, if they thought it was a problem a month ago, they apply it to this circumstance. That's happening on both sides of the aisle. But when it comes to the question of ESG and these initiatives,
environmental
social and governance,
right, and the encouragement of companies to take that into consideration with their investment.
Yes. So there has been a lot of political debate about that. There is substance here. And if the management of these institutions was much more concerned about politics or the environmental or social goods rather than the governance regulations, ensuring you had a capable board, you had proper oversight of people's deposits, then this shows they had mismanagement. So I think there are
Do you have
natural
evidence
questions
of that,
we have.
I mean, there wasn't a risk officer fully at Silicon Valley Bank for an extended period of time.
Yes, and you had very few people that had banking expertise on the board of the bank. So there are some questions, natural questions we should raise.
But that's that's bad management. That's not woke banking, whatever that means.
But as I said, whatever your book of business was as a politician a month ago, a year ago, is applied to this general circumstance. What I'm trying to do is get to the details of what happened and have and then determine whether or not there's a proper legislative response.
Yes.
But when you have a hammer, you look at the world as a nail.
Right.
And that's what we see out of politicians.
So President Biden has asked Congress so far, maybe he asked for other things. The only thing he's asked for so far is to be able to claw back salaries of those or pay to executives of failed banks and then to ban them from working in the financial industry. This already exists for the great big banks. Senator Warren supports that. Does that pass Congress?
Well, it's something I'm going to look at and consider.
But it doesn't have to do with the active crisis.
No, it does. It doesn't. But in response to these things, we know that there are known failures of this. We saw, for instance, deposits perform in a different way than regulators assumed, that uninsured deposits left at a more rapid rate than the insured deposits. That's a new phenomenon. When we have the speed of Twitter and a bank run and the speed of electronic banking, those things are things that we need to look at legislatively and regulatorily. Yeah. The question of performance of bank executives, we certainly need to look at that and make sure that they're aligned with consumer protection and depositor interest.
Congressman, we'll be watching your upcoming hearing. Thank you.